Deirdre, yesterday's big development, the Dow crossed 10,000 for the first time in a year. But demand for fixed income also has been strong as of late. Investors have been piling into bond funds, and some people argue that bodes well for stocks. John Erlichman, over here at the markets desk. Explain what's going on here.
Well, we're trying to find out whether the Dow can keep climbing. One interesting stat that our team here at Bloomberg found was that the money that's gone into bond mutual funds this year, about 18 times the amount that's gone into stock funds. And actually, Morningstar has some cool stats on this, that you've had about $255 billion in inflows this year net versus $14.5 billion for equity funds. And then you have all that money in the money markets, $3.5 trillion or so. And so when you ask that question, is the cat going to stay on the sidelines? Maybe that's the argument if you're bullish, that there are a lot of people that missed out on the stock rally.
But what about that argument, though? A lot of people say that people have sought the safety of money market funds. There is that implicit government guarantee that they're not going to break the buck again, and maybe it just stays there.
Yeah, and Bill Gross, still a big fan of government bonds as well. You're absolutely right. 9 months, the inflows, certainly a convincing story on bonds. The September numbers, however, a different story, because if you look at bonds in the high yield or the investment grade category, just like stocks, they've had huge moves. And then in September, we started to see some money coming out of those types of funds. Marty Fritzen of Fritzen Advisors says, the sideline cash, some people just like that liquidity.
Let's talk about the spreads for the moment. The argument in equities is that they can't go higher because valuations are becoming stretched.
Right.
Similar argument for corporate bonds, investment grade high yield as well, right? That the spreads have become so narrow that the prospects for repayment just aren't getting any better with the outlook for the economy.
You definitely have that argument, and that argument about the back from the dead names in the stock market. Same story in the bond market. In the high yield category, those have been the biggest winners. Now people saying, let's look maybe for some higher quality names.